What's up, team? Okay, so the first week of December is officially over, and it was a pretty solid week overall for my trading. I've mostly been using two different strategies in this market, one of which being the VWAP bounce. And so make sure to hit the subscribe button, because in this video we're breaking down how I make it work and how I specifically profit from it. Okay, so before we move any forward with this video, let's go ahead and break down what a VWAP bounce actually is. It's a day trading strategy going long, where the stock pushes up above the VWAP, pulls back to it, which is where you're going to make your entry, and then breaks out above to the previous highs of the day and possibly over that. It's a dip buying strategy that uses the VWAP as a support level and ultimately relies on trend confirmation. The first thing I really look for with VWAP bounces is some type of support level in pre-market. One of my favorite things to happen in these type of trades is when the pre-market levels and the pre-market high lines right up with the VWAP. That gives it twice the support and ultimately will help boost your trade to help it push back up to that previous high of the day up here. It just gives it some added support levels because some people are actually buying the dip using that pre-market high as support. And then others are using the VWAP as support, and so when those two can come together, like I said, it just increases your odds in the trade and will help you have a higher accuracy rate with the VWAP bounce specifically. So the point is, if you can find a pre-market support level, typically the pre-market high, right around where the VWAP is, it'll give it twice the support and ultimately help your VWAP bounce follow through. One of the most underappreciated and easiest ways to trade the VWAP bounce is by using that opening range as your risk level. One of the reasons I think this actually works pretty well is because other traders use these specific levels. And so when the stock breaks below it, it can really get squeezed down, and using that as your risk level can help you avoid that in the future. Let's use this current chart as an example. If we enter this position at 36.90 going long for a VWAP bounce, and we use this 36.80 level as our risk, then our risk is essentially 10 cents in this trade. And if we make our reward target up here at 37.10, then we have a 2-to-1 reward to risk ratio. And if we set it higher than that up here at 37.20, then we have a 3-to-1 reward to risk ratio. And that's how you get into good ratios with these trades, and you set yourself a tight risk using that opening range high. Anyways guys, that's it for this one. Remember, I'm not an expert or a guru. I'm just sharing how these strategies have helped me so far, but this stuff could always change in the market. Also, if you're interested in using the same platform as us, I'll include a link to the description. There's a lot of benefits for new traders because once they're approved, they get to day trade with no PDT rule with 14K in buying power with their base package. It's $3.99, and I just think it makes a lot of sense and allows new traders to save some money and risk less when first getting started. And so like I said, I'll include a link to that in the description, but you can also watch us trade using them live every weekday morning for free on YouTube. So don't forget to hit the subscribe button, click the bell to turn on notifications. Good luck in the markets, and I'll see you all tomorrow morning.